Good morning, good evening, good night. Wherever you be watching this transmission, it is I, Mike Martins. Welcome to a very special edition of Can't Read Market Talk. Bringing you the latest in what's happening in markets around the world, from housing, global markets, money markets, gold markets, silver markets, all futures markets, all everything. Just looking at dead stocks, good stocks. We are not, guys. Remember, we are not on an investment channel. Please do your own research. We're just talking. We got call-ins. We got people call in, and if you want to join the show or participate or discuss a stock, you could go ahead and we are rolling live. So, and already in the comments, there's people already commenting. There's 0 people watching, and we got 2 comments. Mr. E says markets all having a race. Yes. And I'm going to explain why, and something happened, a key movement in Canada has caused that. So before we kick off, can't read market talk. See, I can't read. Let's look at what's happening here at the channel. Guys, lots of information here on the channel. A lot of people are asking me to make videos about certain specific things. Go ahead and type in, go on the channel and go to here to search. Type in, if you're from Scotland, look, Scotland. Probably already discussed right here. Trends in the housing market, UK edition, God Save the Queen. There's lots of things that I've already posted about Scotland on my channel. So go and search the channel. There's a lot of stuff that's hidden, basically, from search menus via or search avenues through via YouTube, right? Okay, guys, it's a beautiful morning today. It's going to reach in the 30 centigrade here. It is what's today? Today is the 4th of September, 2019. And guys, I want to thank my new Patreon supporter that just jumped on board. I want to thank you for the support. So I got several underbosses. I have 2 underbosses now. So if you want to join the family, please go ahead and join the family. Your donations are quite appreciated. When you spend 40 hours a week on YouTube, it pretty much it becomes a job. You know what I'm saying? Andrew Baker, markets are going to rally on the Hong Kong news. Yes, but I think it's short-lived, says Andrew Baker. And Carrie Lam withdrew the extradition bill. I agree completely. Yeah, he's right. Yeah. So it's moving up. It's definitely gonna be short-lived. We're gonna get to that in a second. Okay, hold on a sec, guys. So yeah, thank you, Patreon supporters. Let's move to Yahoo. Let's look at the market fixtures or market numbers or our market standings for right now. The S&P TSX sitting at 16,459.95. That is up 6.72. Plus 0.37%. And why is Canada rallying all of a sudden, all in the TSX right now, all of a sudden? Well, because Bank of Canada holds interest rates for now. Canada's central bank has held its overnight rate at 1.75%. That's very important to keep that in mind, because Canada is trying to not dig themselves in further, like Australia is, and the UK. S&P 500 sitting at 2,933.12, 26.85 points up, 0.92%. The Dow Jones sitting at 26,326.20, up 208.18 points. Canadian dollar is going strong at 0.755. Remember yesterday, guys, it dipped to 0.74. Crude oil's taken off. Wow! Crude oil stocks, my old crude oil stocks are on fire right now. Get it? Oil's on fire. Crude oil sitting at 56.22. Are we going to see a $70 barrel by Christmas? Look at that, up 2.28. This is only short-lived. Bitcoin hovering around the 10,000 US mark. Gold futures, here it is, guys. This is what you came for. Gold futures sitting at 1,557.10. And up 1.2. It dug itself out. It went down a few points, and it's dug itself back out through the market day. We still have 4 hours left on the market. Russell 2000, remember, guys, keep an eye on this one. It's up 9.77. These are the small cap stocks that actually make a difference in the mutual funds and hedge funds and stuff. Once the Russell 2000 starts looking at it taking a dip or taking a sleep, watch out, guys. The 10-year bond, guys, 10-year bond, is sitting at 1.466 at the 10-year bond yield. So, guys, it's still sitting at 0%. It took a huge punch in the gut yesterday. Nasdaq sitting at 7,950.18 at up 76.06 points. Volatility is 17.72. So this tells me if that's the volatility, then VIX should have gone down $1 or $2 from yesterday. Let's see, VIX should be down $2, $1, $2. Yep, down $2, 17.72. I've been watching this VIX like a hawk, and I know when it's gonna go up and down. I know, I can taste it in my mouth. Okay, all right, let's go back. I don't want to seem like I know what I'm talking about. So, okay, the FTSE up again 43.07, and with Brexit looming, FTSE is with Brexit exits, it's going to be very interesting. And the Nikkei kind of surfacing through a semi-bad trading day with news from Hong Kong, sitting at 20,649.14. So okay, we got Mr. E and Andrew Baker, two of my good personal friends in the comments there, and Andrew Baker, my personal investment analyst friend, in the comments also. Okay, guys, so what do we got going on? So let's look at so we're gonna look at a stock for the day. Maybe we could get Andrew to give us a stock of the day. Every 30-minute show, we like to throw up a stock of the day. What stocks we should look at? They don't have to be going up. It could be stocks to look at for the future. We could stocks that we could be like. We could look at some of the losers for today. We could look at the top mutual funds. We could look at some of the top commodities if you like. It doesn't have to be always the same thing, right? It could be. We could always talk about something. Okay, let's move in here. So yeah, VIX down $2. I kind of figured it was going to be down. I always watch this volatility index, and I watch what's happening with the 10-year bond. You can start correlating your own numbers in the back of your head and to see where it's going on. Guys, we have a good connection to the internet today, so I'm kind of happy. I don't want to jinx it. I'm not jinxing it. Okay. All right, let's go to Bloomberg. What is Bloomberg wanting to tell us? Bank of Canada balks at joining the global policy easing trend. Canada's trade deficit unexpectedly widens in July. Trudeau homebuyer plan offers a little solace in hot markets. And consumer worries cloud best Canadian GDP gain in 2 years. Guys, what is going on with this best GDP gain in 2 years with Canada? Especially with Canada in the reality having a very weak manufacturing, really weak manufacturing quarters, but employment hiring is just going out of control. Why? Most of it. Let's say they're right about the numbers. Let's call a spade and say yes, these job numbers are real in Canada. Well, it's all service industry. It's either you're selling coffee or you're shoe shining or you're selling car insurance, right? You know, we're not making the coffee in Canada. We're importing it. So that's why our manufacturing is at the weakest it's probably been since the 1930s. Okay, so we got people in the comments. I'm looking more at the FX at the moment, says Andrew Baker. FX. Okay, he's looking more at FX at the moment. Is that the ticker, Andrew? Let's find out. Here it is. FX. Euro, I guess it's the euro? Or karaoke. All right. We'll probably get someone on the show in a few minutes if somebody wants to come on. Okay. It's shaky start to September for Canadian stock traders. Oh, man. They're doing everything to keep themselves balanced. I see them shaking money trees or different areas in the money markets to try and get the commodity markets kind of moving up. But Brent is up another 2.34%. Dow Jones is up. I'm just reading it here, guys. I know I read it before. Let's move on. Consumer worries could best Canadian output gains in 2 years. Guys, I don't understand, man, where this is coming from, where this money come, where people right now in Canada are like, not a majority, but a good percentage of people, I say 46% of people in Canada now are spending more money than what they make. And this is becoming a problem. They spend more, and Australia is a lot worse off. They spend a lot more than what they make, right? So Foreign exchange says, so we got the comments rolling here. Keep the comments rolling, buddy, everybody. And people are spending, and I'm saying, like, let the layoffs begin. We're going to start the layoffs. Layoffs are going to start moving through. And the problem is there is no recovery happening. This is what's scaring me, guys. We're not seeing signs of a recovery. We see a good day in the market. Woo, hip, hip, hooray. My silver's still up. My silver stocks are still up today. You know what I'm saying? I'm still taking gains today on silver. You know what I'm saying? Why? Because the trend, it's not pulling back as hard as it should be, like it used to. You know what I'm saying? When the feds are buying treasuries, what it means is just massive inflation. And inflation is affected by, and how does that affect you? Well, the reduction in your salary, your buying power, your savings, your investments get affected. You know what I'm saying? So the problem is we're seeing now, the reason why we're not seeing a correction in the markets or some sort of a corrections of sort of say is because the governments are spending more than what they're taxing. And this is becoming a bigger problem all the time. They're spending more than what they could tax. So, yeah. So, and here's a little tidbit of information for you guys that are still worried about gold or thinking that gold is too expensive. Gold's bargain. Gold is a bargain at what it's at right now. In consideration to what is happening around the world in inflation and derivative markets and all this Mickey Mouse IOUs floating around and money markets trying to feed into the rest of the markets. You know what, guys? Here's a tidbit of information, okay? And Peter Schiff brought this up the other day on his podcast. I listen to him once in a while. He's a great guy, and he's a gold bug, okay? He's not really a crypto guy, but he said this, okay? And it makes total sense. Gold moved up 50% since December 2015. Gold moved up 50% since December 2015. And he's dead to rights on that. He's Johnny on the spot with that. He's right on with that. And yeah, Damina says the problem with gold is you can't eat it. So Andrew Baker saying they are moving further along the yield curve to try and maintain loan serviceability. That's exactly what's going on. So here it is. Canada's economy recorded a stronger than expected rebound in the second quarter. Experts recovered, but surprisingly weak consumption and business investment will cast doubts on the expansion's sustainability. Output grew and annualized pace of 3.7% in 3 months ago through June Statistics Canada in Friday in Ottawa, up from a polarity of 0.5% increase of the first quarter. The rebound follows 2 straight quarters, hardly any growth. The period also ended better than expected with a monthly expansion of 0.2% in June. Underlying details, however, were less impressive. The rebound was driven by the fastest quarterly increase in exports since 2014, but growth in household consumption came to a near halt. Consumer confidence. Right now, in the U.S., according to their records and their data, according to what they're saying in the United States, consumer confidence is at an all-time high. But in Canada, it's the complete opposite, what they were reporting. Despite strong gains in incomes, and businesses' investments shrank by the most in more than 2 years. As a result, domestic demand contracted in the second quarter. What does that mean? Is our economy is starting to shrink, folks. We're having a shrinking economy. Let's move on. Now, again, I'm sorry that I'm jumping so far into Canada today, but CIBC may have gone too far in mortgage retreat, CEO Doddy says. The head of the Canadian Imperial Bank of Commerce admits the lender may have retreated too far in the domestic mortgage market. Candidly, I think we went... When they start off with candidly, it's like they're massaging the language in a way where... Look how intelligent I feel, and look how you should be listening to me. So, anyways, I think we went too far left in showing things, slowing things down put the brakes on too hard, and we're readjusting for that. Chief Executive Officer Victor Dodang said Wednesday, Scotiabank Financial Summit in Toronto, we are now looking to create more robust presence in the mortgage landscape. You know what? You want some advice, CIBC? Get the hell out of the mortgage market. Start actually lending off deposits and start give an actual be competitive in mortgage rates on savings if you want. Start giving people back some money that save money in your institution, and you'll see savings start going up and actually filling your reserves with actual money. Okay, let's keep going here. So let's move on to that. So I think they are walking down a path of destruction. All right, let's move on. North American stock markets fall on new tariffs and weak manufacturing. Again, manufacturing, I think, in the United States has been the lowest it's been since, I think, since the friggin' Civil War, if you want to really go that far back, with the amount of debt that's flowing out there. Yeah. North American markets fell to start the trading week on Tuesday, following an imposition of new tariffs by the U.S. and China and weak manufacturing data. After a strong week end to volatile August, investors were hoping that positive sentiment would continue after Labor Day holiday, with Ryan Crowther, portfolio manager of the Franklin Bizet Investment Management. But with tariffs continuing to escalate and the news on that coming out, never the weekend, the weakening economic picture in front of in people's minds. And I think that's what the weighing on the market today. He said in an interview, the U.S. imposed tariffs on more than $110 billion worth of Chinese imports Sunday, while China put duties on U.S. crude oil. So I don't know about, the U.S. putting duties on U.S. crude oil won't make too much of an impact, because the China buys black market petrol from Turkey and Turkish dealers that are buying back black market petrol from Syria. So there's a lot going on there. So, and they buy from Iran and other countries. So it doesn't really matter if China wants to put tariffs on American crude. Sorry, I had to go wet my beak there for a bit. Okay, stock slump on weak manufacturing data as U.S. and China tariffs kicks in. Stocks dropped Tuesday as a weak manufacturing added to fears of escalating tariff wars between the two largest economies. So, this is from yesterday. The Institute for Supply Management announced Tuesday morning its Purchasing Managers Index, closely watched leading economic indicator, fell from 51.2% to July 49. Oh, wow. 41.4, what? 49.1% in August? Okay, that's a big deal. I didn't see that little tidbit there. That's like probably since World War I or World War II. It's obviously a sign that manufacturing sectors is in a recession. Peter Cardillo, chief market economist of Spartan Capital Securities in New York, told the Post that leaves the consumer the only strong pillar of the economy. Yeah, that's the worst. PMIs dip below 50 and a signal that the manufacturing economy is contracting was the first since early 2016. Guys, this means the economy is shrinking. We're seeing a shrinking economy here. Wall Street bogged down. This is by the Financial Post. By weak manufacturing data. U.S. stocks started on the day was a footing, and Washington, Beijing kicked off a new round of tariffs of the weekend worrying. Yep. And Huffington Post, store closures. This is store closures here. Stores closing. 2019 has been full of Canadian store closures. So here it is, people. It's a video, I guess. All right, I got a message here from Sharon in Newfoundland. Great show, Mike. I watched this at work. I love can't read morning market talk. Great addition to your channel. Thank you so much for doing this for us. No problem. Thanks for messaging me. Okay, this thing's broken. So that's it. It has been a tough year for Canadian retailers. We said goodbye to Payless Shoes, Town Shoes, Home Outfitters, and the last two Zellers locations, along with a few other stores. Canada is going to be the forefront of closures. You got a lot of Woolworths closing in Australia. You got a lot of other inside retail. Zara defends IFC mall store closures after mainlanders misunderstanding. Okay. Forever 21 bankruptcy. I'm not going to open this here. So this is what's happening. Let's see if we can get someone on the phone to find out what's going on. Oh yeah, Hong Kong. What's going on with Hong Kong? Apparently there is things in the works here. Here we go. Extradition bill. How long would this be lived? Hong Kong leader Carrie Lam to withdraw extradition bill. This is very important for Hong Kongers. It looks like a win in their belt, or a notch in their belt of victory. Let's see. Hong Kong leader Carrie Lam has said she will withdraw the highly controversial extradition bill, which has triggered months of protests. The proposal, introduced in April, would have allowed criminal suspects to be extradited to mainland China. So basically, if you commit a crime in Louisiana, but it's not a crime in Louisiana, but you broke a crime in Washington State, they'd extradite you from Louisiana to Washington State for breaking their law in Washington, even though you did it in Louisiana, which is not a crime. So, it's weird, right? We had Mr. E on the show discussing what's going on. Maybe the smoke is cleared a bit. We could get him on the show on Mike in the Night this Saturday, a.k.a. Sunday for him. And we could get him back on the show, and we could get an understanding on what is happening with that. So let's we got Andrew Baker there in the comments. And Andrew, if you're still there, buddy, if you could hold back on swearing, just not swear for a little bit. I know you're very excited. Turn on your Skype, buddy. I know you're excited, okay? But we need to calm down. We know what's happening. Okay? But we need to remain calm, and we need to educate the masses on a little bit of tit for tat, a little bit of understanding on what's really happening in the markets, right? Okay. And let me see if he picks up here. I'm not sure. I was listening to that music earlier. Hi, Andrew. How are you?
Give me a sec.
So, guys, I would like to introduce Andrew Baker, our current and president for discussion in the markets on Cant Read Market Talk. And it is an absolute pleasure to have him on. He needs to contain some swearing because I know he's excited, and I don't blame him. You should hear me off mic.
Sorry about that.
You should hear me off mic, too. Don't worry about it, buddy. It's not just you. You should hear me off mic. All right, Andrew, what's going on in your opinion? What do you want to talk about? Do you want to talk? I would like to talk about what we're on topic here about. It's kind of important, the weak manufacturing numbers, and I did not know it was from it goes back to the 1940s since we've what do you think is going to kind of lay out the primrose path for us on what do you think is going to happen with these weak job numbers and the fake employment numbers? What's with that? Australia posting gains in employment, and so is Canada. What the hell?
Yeah, but they can tweak the numbers with that really easily. I mean, in Australia, the unemployment number is based on, it's not based on whether or not you can service your cost of living. It's just whether or not you have a job. So, and even that, unemployment is not just whether you have a job. It's whether you're seeking a job and you don't have a job. So if you don't have a job, it's really, really technical. They use these ways of defining unemployment as being this particular way. I actually think the labour force participation rate is a much better metric than using unemployment, because it actually tells you how many people, as a percentage of the population, that are working age, that are actually able to work, that are in the labour force. So it tells you when there's a bit more of a secular issue. So if there's something like, say, for example, automation gets rid of 10% of the workforce and they're not looking for work because there's no jobs in the field that they were working in, that's going to show up in the labour force participation rate, but it won't show up in unemployment.
Well, can I tell you a little secret that Canada does? I'm not sure if America does it or Australia, but what Canada does, if you're on unemployment benefits, you're considered on the unemployment roster. But if you're off unemployment benefits and they ended and you're still unemployed but not getting the paid,
that's the same here.
Yeah, you're not on the unemployment roster, so you don't exist when it comes to unemployed.
Well, they also use education as a way of hiding it as well, because they'll say to people that you have to retrain for a new field, and they'll give you a subsidy to retrain. But then when you're retraining, you're not considered to be unemployed, even though you don't have an income.
And what do you see in all fairness in the weak job numbers in the States? They're calling for huge employment numbers, but now it's going like
it doesn't make sense. Look, it doesn't make sense. The unemployment numbers is a lagging indicator.
Right.
What you need to look at is the rate of change of unemployment, because that's more of a leading indicator.
I've been looking at payroll. I've been looking at payroll.
Yeah, that's a much better metric to use.
But they never bring it up on the mainstream media. They never talk about payroll. The payroll numbers are always...
You've hit it on the head. You've hit it on the head. That's exactly what you need to be looking at, because that'll be up to date. As soon as someone loses their job, they're no longer on payroll.
Right.
They'll get sent their last paycheck, and then it'll be a finalization notice in the paycheck, which you then should be looking at as a metric for changes in unemployment numbers, right? But they don't really talk about that, because people don't start looking for a job immediately after they lose their job if they have savings, right? Like, it's not necessarily like they're going to go, oh, I've lost my job, therefore next week I'm going to have another job. Like, it doesn't work that way. It's not... Like, they don't hop on unemployment benefits 48 hours after they lose their job.
So a payroll
numbers... Sometimes it could take 3 months to get another job. So...
Oh, it could take longer than
6 months. It can take years.
Okay, Andrew, here it is. In a stunning announcement, the Bureau of Labor Statistics reported the official payroll numbers in 2018 and 2019 were vastly overstated. It turns out the amount of new jobs created were tremendously inflated and had been reduced downwards by more than 500,000 jobs. This embarrassing admission raises questions as to the actual strength of the job market, the success of the Trump-indicated tax cuts, and how exactly these numbers are calculated. So that it is from payroll. They were wrong by 500,000.
Okay, so I'll just make a few points on that. The Australian government introduced the $1,080 tax cut. It was one of the big things that they tried to get people to vote for them based on. Right? They have future tax plans, but they're not for another 5 years, which is another election cycle away. Now, the big plan was for the $1,080 that people were given in tax cuts would then be spent to stave off declines in consumption, and that hasn't happened. So it basically didn't work. Like, I mean, to me, I saw $1,080 as a drop in the ocean, because the effectiveness is not going to be there, because first of all, you're only getting people that have already got debt to try and consume more.
Right.
Because you're not giving people who don't have any money a tax cut. You're giving a bunch of people that have got a lot of debt a tax cut, and they're going, okay, I'm just going to service my debt, which just fuels the fire because it reduces credit and supply even faster.
And that's why we're not building wealth. That's why we're not building wealth. And that's why we're building debt.
Whenever I hear people talk about wealth, they don't look at the flip side, which is debt growth as well. Right. Like, how do you build growth? Like, it's very ultimately to make lives better and really, really effectively. And that's not really part of the conversation. It's more, how do we minimize consumption, or how do we minimize how much we spend? I don't have a problem with people spending, but you want the spending to be really, really effective. And that doesn't seem to be the conversation people have. Mm-hmm. Like, at least not in the Western world anyway.
Right. And what do you have to say about underemployment? Because I hear that floating around sometimes.
Massive. It's massive in Australia. It's been trending up pretty much, I want to say probably since 2005 it's been trending up.
Right.
So, yeah, there's ways to hide things. In employers can hide things in like so many different ways, and the government will give them an incentive to hide it because it makes the statistics look better.
And one way I look at debt load or let debt per percentile or debt per
Mm.
GDP per person, I usually just go through Equifax or the Credit Bureau statistics to find
Now, this is better. Bank for International Settlements.
what's it called?
They give you the Bank for International Settlements because
Okay.
it doesn't just give you domestic data; it gives you global data as well. So, I mean, Experian, and Equifax and all those credit rating agencies sort of type of countries. They'll give you a little bit.
I like looking at Equifax because it shows it shows credit seeking, and if
It's
someone's
more granular, for
inquiries,
sure.
right?
Yeah, but I think, look, it's all very well for someone to seek a loan, but until the loan's actually been granted, it kind of doesn't really tell you all that much. I mean, if you looked at the rejection rate, that's probably a pretty good, that's a really good barometer because that tells you whether or not it's appetite for credit or whether it's risk appetite of the bank. So it tells you which side of the ledger is stopping credit growth.
Right, right. I hear you. Let's look at some. So Bank of Canada holds interest rates for now. Okay, so
Yeah.
Canada's strong. Canada's strong. They're holding. I thought he was going to lower rates.
Australia held as well, but then we recorded the worst GDP figures for 20 years today. So, I mean, that's probably going to be pretty short-lived.
Yeah. So they're holding rates. So they understand they got to hold the reins because they just can't keep. Governments are spending more than what they tax. So, and this is why gold and silver and precious metals are moving up.
Look, I don't think. I mean, they do that because the private sector's tapped out. Like Canada's private debt is what, like 205% of GDP or something like that.
It is,
or it might be even higher than that.
I think.
But it's mostly corporate, or it's like 50-50 corporate sector private households. Whereas in Australia, it's 120% households and like 80% private sector. So it's mostly households that are wearing the brunt.
Yeah.
So for you probably get a larger amount of equity devaluation, whereas here we've got a larger property value devaluation. Right. So, I mean, in US dollar terms anyway.
But the
I'm
problem
not sure.
We're not creating recoveries with this. This is just making the bubble.
No, you're just kicking the can. No, but you're bringing about the conditions for really, really long-term deflation. And I say deflation when I'm talking about, like, if you were to measure from a decade ago and you compare the rate of inflation. I'm not talking year on year because year on year inflation doesn't really capture how long market cycles operate for. So, I mean, it's the right measure.
How do we get people off the whole debt wagon and get into maybe more credit counseling or maybe understanding that their futures are...
You need debt jubilees. Like, at the end of the day, that's the only way that you're going to be able to do it feasibly, is to have a debt jubilee. But government don't want to do that. Private sector doesn't want to do that because all their assets are a function of the amount of debt that's in supply. So if they reduce the amount of debt, then they reduce their assets as well. Their profitability goes down, and that means that the executive level starts to lose their income.
Right.
Like, it'll push yields up. And it'll be great for savers, but they don't care about savers. They care about their own income. They care about the shareholders.
Of
and then
course,
after
they got to keep them. That's why CIBC and a couple other banks raised their dividend rates a few days ago.
Yeah, well, I mean, that's completely a risk thing. Like, for me, the reason why CIBC and the larger banks in Canada and some of the smaller alt document and non-conforming market banks, like your tier 2 lenders, the reason why they're increasing their yields is because they can see that the risk-off trades are on, and there's going to be a real search for yield. So it's going to kind of put a floor price in their shares for a little while, at least, to stave off the equity devaluations that they can see are inevitable.
Right.
I mean, I'm not sure whether they see it that way. I think they're just trying to incentivize people to keep holding their shares. But all that's going to do is impact on their net interest margins, because instead of the profits being reinvested, it's going back to shareholders, and that's going to eat at their margins in the long term.
It definitely
So
will. We got
it's
Mr.
just a
E.
question of how that plays out.
We got Mr. E in the comments who donated 10 Hong Kong dollars and saying, Mike, the Decepticons want their money, Mike. So that's a joke I say
They
on the
sure
show.
do.
The world's in I don't know how many trillions of dollars in debt, and who do we? And I always say, who do we owe the money to? The damn Decepticons, you know. But yeah,
Yeah, but I think, look, the way the global market works, you need debt for it to operate. Like, debt greases the wheels, but it's when you don't understand where the uncertainty is, and all of a sudden when that shows its face, and all of a sudden people in trades and they all say at the same time, or they all realize at the same time that the trades are worthless, and they all rush for the exits.
mm-hmm.
That's when the real problem is going to be is going to appear. Now, to me, there's a bunch of those trades. I don't really want to go through detail on all of what they all are because it could be here all night.
Mm-hmm.
Or for me, it's night. But the point is, you need to understand what the things are that you're in. Because if you don't, you can think you're hedged and you'll never be hedged.
No.
And we've talked about this a bunch of times.
That's right.
I talked about it last time. But yeah, like to me, I feel sorry for people because I try and warn them and then they just fob me off because they think I don't know what I'm talking about.
Oh, I got that for years in the housing market, and now look what's happening.
Yeah, but I think the better you can explain it and the more watertight your argument is, the less likely someone is to keep trying arguing with it because you're just going to shoot down their argument every time. Mm-hmm. Like I had a bunch of people try and tell me the housing market's going to go back up in Australia,
no,
and I was just like, no, check the credit volume. Like, if there's no loan volume,
cat bounce.
Well, there's no loan volume. So where all the purchases is coming from? Like, where are they occurring? They're all occurring in the really, really high end of the market with cash. Okay, fine. What does that say for the rest of the market?
It can tell you that the average Australian proper is rich now. I'm joking.
Yeah, but how many people have sold?
I'm joking.
Yeah. I mean, if you've cashed your chips, then sure, you're very wealthy. But I don't know that many people that have.
Yeah.
And I don't think they can, though. Like, what? Do you know what the weekly transaction volume on Sydney property is? Like, I guarantee the vast majority of people that talk about prices don't know it. It's like $200 million. Not even. They got about $170 million worth of Australian dollars worth of transactions in the property market in Sydney.
That's very little for a size of Sydney.
Think about it. The total market capitalization of the Sydney housing market is supposed to be about $2 trillion. Right? Now, if you're going to tell me that $200 million being traded in a week is liquidity, I have a bridge to sell you.
Yeah.
Because you know how long it takes to turn over the total stock of property if that's your transaction volume?
A lot less than
that.
$1 billion.
It's $1 billion every 5 weeks, right?
Okay.
Which means it takes you 5,000 weeks to turn over your existing stock. That's not including any new builds.
Holy, yeah, seeing it like that's huge.
5,000 weeks is like, what is it, 100 years?
So there's no volume. 5,000 weeks to turn over the stock.
So there's not enough volume to justify the pricing that they're saying that they should be justifying. I mean, at one point in the Sydney housing market, you had like $800 million worth of transactions per weekend.
Right.
So it's 25 years for total transaction volume turnover. I mean, for housing, that's pretty liquid. Mm-hmm. But when you start talking about like 100 years to turn over the existing stock, and then you have no, but like honestly though, like that's what I look at.
Right.
I mean, you could say what you want. Like I could price something and be like, oh, my house is worth this much. Says how many bidders. If there's no bidders, the house is not worth anything because you can't sell it.
That's correct. You're 1,000,000% spot on with that. I never saw that angle, and you know what? It's a turnover of what's out there, and it's a turnover of percentage of what is out there in total, giving you.
I can tell. Look, I actually look at the numbers when it comes to this stuff. I really, really care about the numbers. Like I don't really care about people's sentiment. These people can think what they want.
Of course.
The thing that matters at the end of the day is what the market says, not what people say.
Right.
There's not quite 2 million dwellings in Sydney, and there's probably like 300 to 500, including auctions and off-market sales in Sydney that happen per week.
Right.
Of 2 million. So whatever that tells you, it's very, very illiquid. So I kind of don't have any confidence in the price in housing, because there's going to be a lot of variance or like uncertainty. And again, when I say there's that uncertainty, but when it rears its head and the volume starts going up, it's only going to go one way, which is not up.
Down.
Because the credit growth's not going up.
That's right. And people are not securing financing. People aren't securing financing as easily as they did back in the day. And if
I have like a 10-step process in my head to justify the argument, right? And the 10-step process is the banks in the past were issuing loans at really high volume,
right,
because they had a large interest, they had a high interest rate or higher interest rates to justify giving that volume of loans, because they saw it as if the loans were difficult to pay off, they just cut rates.
Right.
Okay. Now, while you have high interest rates and you're happy to issue the vast majority of your portfolio as mortgages, then everything looks fine and dandy. But as soon as your net interest margin gets impacted by the fact that interest rates keep getting cut, they then have to start seeking more risk. And the way that they've done that is by trying to aggressively acquire loan balances of credit cards and other lower credit quality debt.
Mm-hmm.
But in so doing, what they've done is they've guaranteed that they're not going to write new loans, because all the loan balances that they're buying off people are people that have already got debt. Mm-hmm. They've already got mortgages, so they're not going to grow their loan portfolio.
Of course not.
In the credit space, and they're also not going to grow their mortgage portfolio, because now all of a sudden it impacts on the net interest margin every time they write a new loan, because they have to write it at the lower interest rate. So it's just going to make it worse and worse and worse. If they do increase mortgage volume, then the net interest margins get deteriorated anyway. Mm-hmm. So they're in a real catch-22. They can't solve this problem easily. Right. To me, it's like there's a no-win proposition for them. So they're just trying to acquire the worst credit quality debt that they can, so that they can be big enough that the government has no choice but to bail them out.
Right.
And that's my view.
No, that's a 1 million quadrillion % spot on as usual, Andrew. Anyways, I'm gonna have to cut the show. It's 42 minutes we're on right now. I gotta run a few errands before I open my shop, and cool. I want to thank you for taking your time to give us your perspective on what.
And no F-bombs.
Huh?
And no F-bombs.
Yes. No, I know you're excited, and that's good. That's fine. And I'm going to be looking at this today. The Porsche Taycan revealed the monster stats behind the Porsche's big electric bets. This car looks cute. It's a 4-door.
Yeah, it looks nice.
Yeah, I'm looking at this.
But I think, look, I'm going to say this is a big call. I actually think Dyson's going to blow everyone out of the water.
Who?
James Dyson is working on an electric car. You know, the vacuum cleaner / hairdryer /
Oh, yes.
Air purifier.
Yes.
So I think he's going to blow everyone out of the water. And the reason I say that is because his entire supply chain of manufacturing is basically miniaturized auto parts. They have an electric motor, they have an air conditioner, they have windscreen wipers, they have airflow, they have all the ergonomics of aeronautical design. Like the entire team is basically aeronautical engineers.
If you get a stock, is there a stock ticker for this?
They're never going to be listed. No, they're a private company.
Okay.
They're never going to be listed, so you can't invest in them. But I will say that it's probably more beneficial to invest in the commodities that they need to buy, because there ain't no way that they can just make the commodities. They have to come from somewhere.
It's got to be extracted from something.
So that's what I'd be doing.
Okay. All right, Andrew, thank you.
But I like your thought process.
All right, Andrew. Thanks so much. I appreciate you coming on and taking your time with us and giving us your expert opinion on what you think. Thanks so much, buddy.
No problem.
Have a good one. Bye.
Good to talk. All right, sir.
So that's Andrew, one of our main consultants here on Can't Read Market Talk. And very happy to have him on because he actually understands what's going on in a nutshell. He could tell you what's going on in any sector of the market. That's why we had him talk about a little bit about the job, because I'm concerned about what's happening in the weak manufacturing sector in the weak quarter. So, and how they gauge jobs and employment and unemployment numbers. So, payroll's the way to go to find out what the job numbers are. Anyways, guys, Can't Read Market Talk with Mike Martins. Yes, I can't read. Thank you for following and thank you for watching. And I got friends in Mexico watching this saying they're using Google Auto Translate now on their YouTube. So they're watching a lot more of my videos in Mexico. So that's why I'm wearing my Mexico jersey today. So muchas gracias a mis amigos de México que están mirando esta transmisión. Grande abrazo, lo siento. And yeah, it's good. I appreciate it very much. So guys, thanks so much. And like my daddy, Antonio Martins used to say, make good memories on this earth. Have good times on this earth, because when you die, the only thing you take with you are your good memories. So make good ones. Thanks, guys. Thanks for watching.